Mark Zuckerberg, the billionaire co-founder and CEO of Facebook, is one of the wealthiest people in the world. And while his net worth is now estimated to more than 80 billion, Zuckerberg did not even pay cash when purchasing his home. So the most important question is, why would such a wealthy person borrow to buy a house? And how do rich people take out debt to create more wealth all the time? And in this video, I will explain the reason behind this and why this is so simple and easy to understand. And I will tell you how you can apply this simple money trick yourself. Because Zuckerberg financed his Californian home with a 30-year mortgage against a low mortgage rate of 1.05%. So why did Zuckerberg opt to borrow instead of paying cash? Here are the 5 most important reasons why he did this. Reason number 1, the low rate debt. Mortgages come with a low interest rate at this moment. And this means that borrowing money is cheaper than using up a lot of your own cash to buy a property. Reason number 2 is the inflation hedge. So let me explain how this works, because it sounds maybe a little bit complicated, but it isn't. How does inflation work? And why is it so simple after I explain it to you? Typically, inflation has a negative impact on your money. But here's the trick that all billionaires use, which I will share with you in a moment. So, because of inflation, the value of a single dollar is going down. So your buying power is also going down. So imagine this. You go to your favorite cafe to buy a cup of coffee. When you first started going there in 1970s, it cost you about 25 cents for a cup. But as time goes by, the cafe raises the price by a little bit each year. So after a while, you find out that you need more dollars to buy the same cup of coffee. So in 2024, you need almost 10 times more money to buy the same cup of coffee. And that's how inflation works. Things get more expensive over time, and your money doesn't buy as much as it used to do. When I say the value, I mean the purchasing power in today's dollars. So in 1 year, spending $100 is like spending $100. So because of the inflation, the same $100 in 30 years from now will have the same equivalent buying power of $38 today. So your $100 isn't the same $100 after 30 years. So if you want to spend the same $100 with a 3% inflation, you need $260 over a period of 30 years. This is the reason why employees are often compensated for inflation through wage increases. So your purchase power will remain the same even if prices of goods and services rise due to inflation. So imagine this, and it is really important that you get this. So I will do my best to explain it to you. Imagine you take out a mortgage loan for $300,000 to buy a house, and you agree to pay it back over 30 years. Now let's say there is inflation and prices increase by 3% each year. After 1 year, because of inflation, the value of money decreases. So even though you still owe the bank $300,000, each dollar is worth a bit less than before due to inflation. And as a result, the real value of your mortgage decreases over time. So let's calculate the effect of a 3% annual price increase over 30 years. So if you took out a mortgage loan for $300,000 to buy a house and inflation averages 3% annually, here's how the value of that $300,000 changes over 30 years. Because after 30 years, the value of the money you owe remains $300,000 nominal value. However, due to the inflation, the real value of the $300,000 is significantly lower. So using a simple inflation calculation after 30 years of 3% annual inflation, the real value of $300,000 would be approximately $112,000. And this means that even though you still owe $300,000 in nominal terms, the purchasing power of the $300,000 in today's dollars would be around $112,000. So while the nominal value of your mortgage remains the same, inflation has effectively reduced the real burden of your mortgage debt over 30 years. And then number 3, and this is a real important one, because while inflation may reduce the real burden of your mortgage debt, the value of your house could also increase. This means that the equity you have in your home, the difference between its market value and the amount you owe on your mortgage, may grow over time. And the primary reason wealthy people like Zuckerberg, Elon Musk, or Warren Buffett take mortgages is because of the low interest rate available at this moment. And because it costs them absolutely nothing when you can borrow at an interest rate that's below the rate of inflation, you are essentially borrowing for free. So they can easily secure a mortgage rate ranging from 1 to 3%, while in the meantime investing their wealth in stocks that yield an average return of 8%. This strategy allows them to leverage low-cost borrowing money against higher investment returns. And then number 4, and this is the reason why billionaires get richer and richer every day, and that is they are keeping their assets invested while borrowing money allows millionaires and billionaires to maintain liquidity for other investments or personal expenses. So these billionaires made a smart choice when borrowing money at a low interest rate, and most homeowners should follow their lead. And this is because there is an historic opportunity to potentially save thousands and thousands of dollars on your mortgage. And chances are that the interest rates won't stay at this low for much longer. We don't know how long this low level will persist, but it could rise. So that's why taking action is crucial. Whether you are wanting to refinance and cut your mortgage payments, or you are ready to do a new home purchase. Then number 5, by taking out mortgages, you can deduct the interest payments from all your taxable income, reducing your overall tax burden. Tax deductibles are like special discounts on your taxes. They are expenses you can take away from the money you earn, so you end up paying less tax. For example, if you pay interest on your mortgage or give money to a charity, you can use those expenses to lower your tax bill. And by claiming these deductions, taxpayers can potentially lower their tax liability and keep more of their income. So hopefully you are getting this game of inflation and let the inflation game and time work for you. If you like this video, please give us a thumbs up, and if you have any questions, please let me know down below. So take care and see you the next time.